Welcome to Daily Finance News, your go-to source for all things related to finance, economics, and investment. Today, we will be discussing the recent financial performance of Target, one of the major US retailers, and the various challenges it's been grappling with, including a pullback in consumer spending and an alarming rise in theft. Target recently reported another decline in quarterly profit and issued a cautious sales and profit outlook for the current period. The Minneapolis-based company is wrestling with rising costs, a problem that's being exacerbated by a surge in theft and a growing sense of caution among consumers when it comes to spending. Despite these hurdles, Target managed to outperform Wall Street expectations and maintain an annual profit guidance that sits above industry analyst projections. This places Target among the first major US retailers to report quarterly results, making it a point of keen interest for those wanting to gauge the impact of persistent inflation and tightening credit on consumers. In the coming days, we'll be hearing from Walmart, the nation's largest retailer, who will be announcing their earnings. We also have Macy's, Kohl's, and Nordstrom scheduled to post their quarterly results later this month. Another significant player in the retail sector, Home Depot, which holds the title of the nation's largest home improvement retailer, reported a drop in sales for the first quarter by 4.2%. The company also anticipates its first annual revenue decline since 2009. Recent US data also revealed that while Americans slightly increased their spending last month, supported by a solid job market and a dip in prices for certain items, they are still barely managing to keep up with inflation. As for Target's specific financial performance, its first quarter net income slipped nearly 6% to $950 million, or $2.05 per share, for the 3-month period ended April 29. This figure stands in contrast to the $1.01 billion, or $2.16 per share, that the company earned in the same period last year. During the quarter, sales increased by a modest 0.6% to reach $25.32 billion, up from $25.17 billion in the year-ago quarter. Interestingly, these figures surpassed analyst expectations, which anticipated earnings of $1.77 per share on $25.26 billion in sales for the period, according to data provided by FactSet. However, this marks the 5th consecutive quarter that Target has seen a decline in profits, albeit the decline this time around was relatively smaller. In prior quarters, the retailer reported a 43% drop in profits for the fourth quarter, a 52% drop in third quarter profits, a 90% drop in the second quarter, and a 52% decline in profits for the first quarter of the previous year. Looking forward, Target expects its earnings per share to be in the range of $1.30 to $1.70 for the current quarter. This estimate falls short of analysts' expectations, which projected earnings of $1.95 per share, according to FactSet. For the full year, however, the company is sticking to its prior guidance of $7.75 per share to $8.75 per share. In comparison, industry analysts are expecting earnings to be around $8.36 per share, as per FactSet. One major issue that Target highlighted was the impact of theft on its bottom line. The company anticipates related losses to possibly exceed $1.2 billion this year, up from an estimated $700 to $800 million in losses from theft last year. The retailer also noted an uptick in violent incidents at stores, but maintained that it has no plans to shut down any stores. Instead, Target intends to ramp up security measures and begin locking up certain items. Retailers, in general, are grappling with a surge in thefts, with some even resorting to closing stores or withdrawing from locations due to the massive losses incurred. Some of these thefts are tied to organized criminal gangs, an issue that has gained increased visibility in recent years as high-profile retail thefts and flash mob robberies have captured national attention. In terms of comparable sales, that is, sales from stores or digital channels that have been operational for the past 12 months, Target's performance was flat when compared to the year-ago period. This marks a slight slowdown from the 0.7% growth seen in the previous quarter. However, customer traffic has seen an upward trend. Shoppers seem to be focusing more on buying necessities like groceries over non-essentials. But they continue to rely on Target for affordable, trendy fashion items. While comparable store sales grew by 0.7%, comparable online sales saw a decline. Target CEO, Brian Cornell, acknowledged the challenges faced by consumers amid persistent inflation and rising interest rates during a media call. In light of this competitive environment, Target is making continued investments in both its brick-and-mortar stores and online presence. The retailer announced in early March its plans to invest up to $5 billion this year in expanding services for customers, which include a drive-up service for returns, renovations at 175 stores, and improvements in online shopping. Despite the challenges faced, Target's shares rose by approximately 1% at the opening bell. And that's the rundown on Target's recent financial performance and the broader challenges facing the retail industry. We'll be keeping a close eye on the sector's developments and bring you updates as they come in. Thank you for tuning into Daily Finance News. For more insightful finance content, remember to subscribe and hit the notification bell to stay updated. Stay financially savvy, folks.